Morning, this is Andrew from Trend Following Mentor. It's January 7th, and in today's our short lesson, we're going to talk about you don't have to be in the stock market all the time. You want to pick and choose your entries, and really what you want to do, or what I suggest is, first of all, park your opinions. They don't mean anything. No, and also do not listen to anyone else's opinion. What you need to do is do your work. What does that mean? You look at the stock market, you read what it's telling you at the moment. And really what's interesting is if you look at the S&P 500, which is very interesting, you've had 3 down days. Okay, that in itself doesn't really mean anything. But you have a very strong divergence here where you're higher here than here, yet you're lower here. So internally, the market is, or can be considered at this juncture, weak. Combine the fact that you have 7 distribution days. Yesterday, you had negative volume and close on the lows, and you had relatively, okay volume, strong volume on that. So there were more sellers in the market. So right now we have 7 distribution days in the NASDAQ and in the S&P. And historically, when that happens, a correction isn't that near off. But anything can happen when we're trading. One of the key things I always do is I look at the 10 and the 30 exponential moving average. If the 10 crosses below it, it's a negative sign. And you can see how this long period from all the way from here, from October, we had smooth sailing, even though we had the threat of the government shutdown and everything else. This is your line of demarcation. When you're in a situation like this or like this, you don't want to be in the market. You want to step aside. That's what I mean. You don't have to be in the market all the time. You don't have to take every breakout. The example is like this. Yesterday, and this is one of the strongest stocks and one of the strongest sectors, it's Align Technologies, where they did like a dental type of for braces and things of this nature. A new product, very cool. And you can see they broke out on high volume yesterday. But I didn't take this trade. And the reason I didn't take this trade is because of the number of distribution days. And I'm trying, it's like you try to have your rules but be flexible also in them, and also flexible in your expectations. And reading what the market is doing. I want to be buying breakouts in scenarios like this when the market doesn't have distribution days, that we're just coming into a new uptrend, that we've had some kind of a cleaning out with either correction or we're coming out of a bear market. Because, again, all we're dealing in is risk. And let me show you these two. These were also leaders yesterday. And this, this stock, ALGN, which has been everyone's favorite, has fallen out of bed pretty strongly, actually. And it was on big volume. I mean, it had 4.5 million shares. And these were sellers. These weren't buyers. These are sellers. And you can look here. These are sellers. And you have weak volume going back up. Another one is this Valiant. This also had big selling. Right here, you can see it. You had another 2.5 million shares being sold. This is big volume to the downside as well. So what I'm trying to say is you have to pick and choose your spots when you're in the stock market. You don't want to buy every breakout. You really want to be able to buy after a correction or a bear market. And the only way you're really going to know is you go back to the S&Ps. You can see you're above the moving averages. You can see there's not distribution days. You can check that the market is closing on up volume, not down volume, and repeatedly of those. And that the other big issue for me is that you have 61.8% of financial advisors are bullish. Markets go down when everyone's bullish. It's exactly like what I had discussed in the prior lesson that we talked about in 2007. We were at that same point in 2007, 61% or thereabouts were bullish. So really what I want to say to you is, again, you don't have to be in the market all the time. You want to pick and choose your places. You want to buy when people really are, when people don't believe that you're coming out of a bear market. It's when the newspapers are full of doom and gloom. Those are when some of the best opportunities come along. Again, this is Andrew from TrendFollowingMentor.com. If there's any way I can help you, I'll gladly help you. Possibly, if you wouldn't be interested, you can pick up some of my books that are on Amazon. The Bible of Trend Following, The Bible of Compounding Money. Again, thank you, and look forward to talking to you or helping you. Thank you very much.